Hello everyone, this is Ryan Mallory for another session of LiveCharts on SharePunter.com. Today is January 24th, 2013, and we finally got some bearish action out of this market for I would say it's like the first time we've seen it this year. In fact, from an intraday standpoint, it's the biggest swing we've seen the entire year. So you can see prior to today we had 5 down days. I mean, I would even consider this one from the 11th a down day. So we have been trading, 70% higher on average in terms of, the odds of it being an up day or a down day to the upside. It's been about 70%. So that's extremely high. So the market needs to come back down and get back into that 50s range from a historical standpoint. One of the things that's a bit frightening about this market is the fact that we gapped down, we pushed higher, and things look like it was going to be same old, even maybe push out of this upper channel, which rarely would ever happen, but it was looking like that early on this morning, and then all of a sudden we just crapped out, and we have literally moved about 10 points without the least bit of bounce from this market. So that in and of itself is very good indication that the bulls are getting very tired here, and the possibilities of an extended pullback is very real. So I don't think that this pullback will gain any traction until it can drop below 1451. And the reason why I say that is because you got a huge level of support right here. I mean, you could possibly say 1456 it's going to start getting bearish, but I just want to see it clear all that price action, because when you look at it from the SPY standpoint, you get below that point and you're getting into the gap area, and this is a big gap to fill, and the possibilities of it going down to 142 to fill that gap is very real at that point. So there'll be a lot of people that'll be running for the exits below 1451, I believe, and you got other gaps too that still needs to be filled, namely the one from last week or last Thursday when we gapped up, and then you have this November lows, which would be an extremely large move that needs. But I'm not getting ahead of myself here. I'd just be thrilled from the bearish standpoint to see this market finish lower on the day. That's something that just isn't happening much these days. So if they can do that, that's the first step to many to really seeing any kind of sustainable pullback in this market. So back to the SPX though, I mean, this thing can still go all the way down into the 1440s before it even hits the lower band of this rising channel. So if we get a 40-50 point pullback in this market over the next few weeks, it doesn't necessarily mean the bullish scenario is done and over with. In order for that to happen, I think you got to break these lows that were established early on this month. So we have gone up, and we're only 24 days into the month. Well, I shouldn't say only, but we've gone from 1398, which was the lows of this year, all the way up to 1493. So a 100-point move almost in this market. In fact, at one point it was a plus 100 move from an intraday standpoint, because we cracked over 15. I think we had 1501 today. So excuse me. So there is a market that is in desperate need of a pullback. That's why you haven't seen me adding a lot of long positions. Particularly, I got very weary of getting too long too quickly after this two-day move. That sort of threw the whole beginning of the month off, and made me get a very tentative about getting aggressively long, because I believe, and I still do, obviously, at some point this market would pull back, and I don't want to be caught with 10 or 11 long plays and no shorts. So currently I have 2 longs, 3 shorts, and I'll go over those here real quick. I sold out at LO this morning for like 0.9%. Not huge, but when you figure that you're keeping a trade from possibly going red, and I think this one has a heightened opportunity to go red off of the market action we've seen the last few days. We had a double bottom, which is what we were trading off of, but then all of a sudden in the last 2 or 3 sessions, this stock has started forming this bear flag that I'm just really uncomfortable with, and I wanted to use today's pop. I didn't trust that it would hold, you know, its gains if this market decides to continue to move lower. So that's why I got out. I got out with a small gain, but you know, you do that, you avoid the obvious losses that could eventually happen. Do that a couple of dozen times throughout the course of the year, you're going to have a huge difference in how your portfolio performs overall. So big picture is where we stand at in December. I don't think that you get there by one stock, but it's by making consistent, profitable decisions on many trades. And you know, I look at LO from the bigger picture and trying to pad the profits that we're already getting so far this year. BG, this stock, it continues to run. It's only been down twice in I don't know how many sessions, but it's only been like the last 10 sessions or so. It's been down twice and barely twice. So it's moving higher today. It's a candidate to consider based on how we close for whether or not I want to go ahead and book gains, which is currently sitting at about close to 5%. RDS.B, this is the other one that we're in. We're down a little bit in this trade, but overall it still looks pretty darn good. And you got this long-term inverse head and shoulders pattern. I'm not too anxious to get out of this trade, and I'll probably hold on even if we see a little bit of an extended pullback, because I think the stock could hold its own quite well. Tiva, this is the one that we're still short in. The stock continues to not stop us out. We get extremely close. Like today, we got within 4 cents of our stop before this thing started heading lower again. The stop isn't. We've increased it, you know, quite aggressively over the last week or so. So if it stops us out, we only stand to lose about 0.5%. But you can see here on this 5-minute chart, this thing is dropping. So I like what I see in this stock. It still has resistance overhead. Let's look at Target. We got into this one yesterday at 60. I think it was like 6109 or 6103. We got into it. So we're bleeding a little bit on this one today, close to 1% going against us on the trade. I think the trade is still relevant. It's still running into this resistance, and you can see by the morning price action how the stock went higher and then just dropped off of the rest of the market. It doesn't seem to have much of its mojo left to push much higher and through this resistance level. So for now, I'm going to continue to hold it, and the stop loss isn't bad. It's at 62.35, so it's like a 2% stop loss. ALV, after yesterday when the market closed, I had a lot of high hopes for this trade, and you could see when it closed like that yesterday, it was closing below the key support levels that I had identified at around $65. We had closed at 64.76, so I thought if we get any weakness, this thing's going to drop like a rock, but it didn't. It gapped up. I thought maybe there's some news on this thing or whatever, but there wasn't. It just a strange behavior out of the stock today. It's given up a lot of its day's gains. It came close to stopping us out, but you know, I think this one's still in play. I think the chart gets a little bit messier now from here, but it's going to need to keep on dropping here so we can get back into positive territory on this trade, which is only about 30 cents away, but still. All right, let's look at some of the user requests. KBH. This one here, it's already broken out, so the ideal area would have been like 17.14 to get in. Now if you try to get in now, you're not going after the easy money. You're going to struggle to make a good profit off of this trade. So I would wait for it to come back and maybe reconsider it around that 17.15 level about going long on. And in this market where we're this overextended, you don't really want to be jumping into a stock that's already made a very strong extended move in it already. PAG, Penske, I don't like the day's candle. I think that weighs against it. 32.11 seems to have some support there. It broke out of it yesterday. I don't have a really strong feeling about this particular trade though, so I would warn against trying to jump in on this one today on any kind of a pullback. There is some support at that $32 level, but I don't like the candle action out of it. I don't like these long shadows that shows that as it's been breaking out the last 2 days, it's been getting sold. TTM, Toyota Automotive. So we got some car stocks today. Not bad, not bad. This is a foreign stock, so there is a lot of gaps in this particular stock. So, but you can see here it is trading in somewhat of a well-defined channel. Not the best defined channel on top, but it bounced off of it yesterday at 26.60, and it has bounced, about 80 cents from there. So my thought would be is the closer you can get to 26.73 or so, and then put a stop loss maybe at 26.25, which is about 2%. It sets you up for a good trade, because if it gets down below this channel, this uptrend is going to be null and void. So these are good setups that allow you to take advantage of a stock that's already pulled back, be able to get into it and do so with minimal risk at hand. And if it bounces for you, great. You're probably going to make a decent sized gain. I could see a bounce here going all the way back up to $29.50, maybe as high as $30. But if it doesn't and it just breaks below this channel, it's going to be very obvious, and you're going to see the need to get out of it at your pre-established stop loss. ISRG. The gap from yesterday, I think it just pretty much wipes out any opportunity to trade with a solid edge. So I would just scrap it, because I don't see anything that sticks out to me. IBM, similar chart. Had it not done this a few days prior, and we could have traded this breakout above 196.46 or 196.50, this would have been a great trade to go long on. In fact, it was on one of my watch lists, and the fact that it gapped up, you don't get into the trade because it gaps through your ideal entry point. So one of those things that unfortunate, because it would have made for a nice trade, but you got to move on. MIDD, way overextended in the last 3 days, 132 to 139. Looks like it needs a breather. If it could come back to 132, I'd consider it, but we need to see what the price action looks like when it comes back down to that point. So keep an eye on it, and let's bring it back up in LiveCharts if it gets back down to that point again. TYL, nice long-term trend line upwards. If you look at the weekly, it probably shows it even better. Yeah. So since 04, it's been on quite the run. Going from a $5 stock to a $53 stock. This is another one that you probably want to buy on a pullback too. 49.39, 49.40 would probably be your ideal entry point. Maybe yeah, I'd say let's make it 49.40 for the ideal entry, and then see if you can get it to bounce back up after you get your fill. That's going to do it for today. If you have any other questions, I'll be in the splash zone, so feel free to sign up, or if you already have, just drop me a line in there, and be glad to discuss anything and everything with you. And y'all have a great day today and tomorrow and the weekend ahead. God bless.